How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for February 20th, 2018. Right now it is Monday, February 26th, and I'm going to go through all the latest COT report data and examine it and take a look at what the institutions are doing and see how we can use this information to plan our trades for this week and the coming weeks. Okay, so take a look here. You'll see this is a snapshot of the positions that the institutions were holding as of February 20th. So now let's take a look at gold. Alrighty, so what do we see here in gold? As I was examining gold over this past weekend, I noticed something very interesting. As price was moving up here, we had an area here where they had added 48,000 positions long, all right? And that was this jump from here, January 2nd to January 9th. Right here, we got aggressive. So they got aggressive with their longs, which forced price all the way up here. And then once price got up here, what did they do? They closed off those longs. Alright? So this candle here, this green one, is where this data is being represented, 257,000. But the previous data, dropping, was this 251. So the question comes up, so if the institutions were adding long here, and price came up here, when price comes down here, is this an area of demand where the institutions are looking to buy? So that was a question that I was thinking about, and I was trying to decipher whether or not this was an area that the institutions were going to fill in the rest of their orders. And then I was able to determine that it is not, and here's the reason why. Because when they added this 48,000 positions long over here, price went up, but take a look. So they added to 289, 300, 305, and then it dropped from 305 to 298 to 275 back to 251. 241, 251. All right? Added longs, took profits on those longs. All right? So all those longs that they added, they just basically closed them out. So what's left is that if we were to see a price moving upwards from this area, we'd have to have institutions fill in new demand, because there isn't any demand here left over from the institutions. Why? Because they filled in demand, it came up, and when price came back down here, they were closing all the demand that was here. So they filled in demand here, positions went up, or price went up, they closed that demand that they filled in. So all those long positions that they filled in here, they closed them up here. Price dropped, reacting now to that weekly 20 EMA. So who's looking at weekly 20 EMAs and buying? Most likely retail, right? Institutions are not looking at weekly 20 EMAs and buying. They know that the retail traders are the ones that are looking at weekly 20 EMAs and using it for confluence and buying. Institutions don't need trend lines and EMAs to buy. They need to fill in orders. That's how price moves up. Right? Price moves up because they fill in orders. Price moves down because they fill in supply. So when price gets down to this weekly 20 EMA, you take a look at what caused this candle. And what do we see here? A jump from 251 to 257. So an increase in longs by 6,000. And a decrease in shorts from 76,000 to 66,000. So that's not huge. 251 to 257. A little bit of demand being filled in from the institutions, causing the long exposure to jump up from 77% to 80%. So we're starting to enter into these territories again. But I'm not concerned about this. Why? Because they're reacting from weekly 20 EMA. They know that the retail traders are going to buy. So let's say they want to take more profits. Do you want to take profits on longs up here, or do you want to take profits on longs down here? right? You want to take profits on longs up here. Makes more sense. Why? Well, because more profit for you. So if you know that price is hitting a weekly 20 EMA, and you know most likely retail traders are going to come in and start filling in demand. If you want to push price up and help them push price up, you could fill in a little bit of demand to help price get up there, right? It's not this type of demand being filled. You see, when they want to push price up aggressively so that they could eventually close it really high, you see how much demand they filled in from 241 to 289? What's this? 251 to 257. Nothing huge, right? So a little push upwards, and we're just testing that same area up here. So next week we're going to see the data that reflects this drop here, and you know, you could see what's going on. There's a drop in price. So what do you think is happening? They're either one of two things. They're either adding shorts, or they're closing off those longs that they added up here and some more, because we used to be at 241. Before that we used to be at 201 or 202. They only dropped it to 251, which leaves more, right? There's a 10,000 long position difference here. So price drops, hits the weekly 20 EMA, they fill in some long to force it up. They could be closing more longs up there. At least that is what that's what I'm seeing from the data, and that's what I'm seeing on the charts. This is what I'm expecting. This is what I'm expecting. More profit taking up here, and then eventually we're going to get a move to the downside, because this demand has been eaten up. There's nothing. They filled in demand, and then that same demand, they close it up here. Price drops. They had to add 5 or 7,000. And if next week's data shows that this gets reduced back down to the 250s or even lower, 240s, then, I mean, the story is being painted very clearly for me that there's going to be a move to the downside like this. Alright, so this means nothing to me, the fact that it's 80%. They just needed to fill in some demand to get that up there. For me to be convinced that this is going to make a bigger move to the upside from this area, I'd have to see at least these highs be broken, like that. But I don't think that's going to happen, considering what's happening with the euro, the pound, the US dollar, and just looking at this data and looking at the data on all the other pairs, which we'll get to, you'll see why I have a strong belief that we're going to see price get down there like that. Okay, so yeah, this is a quick snapshot of the currency pairs and some commodities. So let's move over to oil. What do we see with oil? So oil longs being closed out once again. It used to be 866, 862, 837, now 804, and that comes as this candle rallies up from this weekly area of demand. Okay, weekly trend line broken. We're rallying up from weekly demand, but what do we see? Even though we're rallying up, they're closing longs, and they're closing shorts, 125 to 114. Long exposure moves up 1 point to 88%. I mean, look at this overexposure. This is just crazy. You know, this has all the signs of a bigger move to the downside. Okay, they're reducing this long exposure, reducing. Even with the push up, they're reducing. Closing shorts, which causes that short squeeze to the upside. Take a look. 716, 734, 739, 712, 60, 689. So reducing overall net longs. Long exposure going up just because of how they're managing their short positions. But overall, it's clear. Longs are being closed off. 866, 862, and so forth. So right now we're we're testing this area, which, you know, I don't see how it's going to hold. There could be new demand that comes into the market, but I don't think that makes much sense from what I'm seeing with the data and what I'm seeing with the charts. I think eventually we are going to get a move further down on the charts. So I'm not taking any trades on this just yet. I want that bigger move to the downside, and then down here, down in these areas, I'll get excited about getting in long oil, but not right now. US dollar, what do we see them do with the US dollar? So they closed off some longs from 24,000 to 23,000. Shorts also got closed off from 26,000 to 25,000. Net long exposure rallies up 1 point from 47% to 48%. And net positions drop slightly from 2.8 thousand to negative 2,000. So my chart still hasn't updated yet, but we're testing this area of weekly supply. And like I've been saying for weeks now, I expect this area to be taken out and for price to head a little bit higher up into this area here. All right, so you know, taking a look, even though there's only 52% of the overall exposure geared to the short side, you know, the sells are red. So, you know, I'm not forgetting that there's a massive bearish sentiment here. It's just that I'm seeing a move up here first before we see a continuation to the downside. So waiting for that move up, then I'll be looking at the data. I'll be waiting for signs to show me that the institutions are starting to get back in heavily with their shorts, okay? Because we were aggressive just a few weeks ago. We're not as aggressive right now, and I believe that's because they're expecting a move to the upside, so they don't want to be as aggressive. They'd rather be getting more aggressive when price is higher up on the charts. So I'm waiting for those signs, and so far everything is playing out perfectly for this move to the upside. Just need to be patient and wait for it to happen. Aussie US dollar, what do we see here? We see that longs have become very cooled off over the last couple of weeks, right? So back in February 6th, they were a little bit aggressive, 68,000, and then all of a sudden, boom, became 49, then 47,000. So longs and shorts both cooled off. And take a look, coloration of the cells, blue, so neutral. Sentiment right now for the Aussie is neutral. And the Aussie chart is very similar to gold in that we have this bounce off this weekly 20 EMA. And remember, this data represents this green candle right here. So longs being slightly reduced, but shorts being reduced even further from 40 to 35,000. So are we going to get a move to the downside? I would think that there's a higher probability of price moving to the downside than price moving to the upside. But again, the sentiment is neutral. Institutions are not holding any strong commitment to either direction right now. So if they're not committed, I'm not going to be committed, right? We can guess what's going to happen, but I'm not going to guess what's going to happen. I want to see a commitment from the guys who are actually moving the markets before I commit my money. What I do know is that if price gets down here, I'm buying. Why? Because that's an institutional trade signal right here. By examining the data, by examining the charts, by examining how price moves in the markets, the way that it truly moves, not based on indicators, not based on support and resistance, not based on all this other garbage that's out there in the markets, but based on real market dynamics, based on how the institutions actually buy and sell and push price throughout the markets. This is an institutional trade signal for me. So if price does get down here, it'll be a great place for me to buy. Alright, so USCAD, what do we see here? We see that institutions closed off some of their longs from 30,000 to 26,000. But take a look at the drop in shorts, 62 to 49. What did I say about the US dollar, right? That they used to be aggressively long, but now they're not as aggressively long. And why do I think that's the case? Because they're going to push price higher, right? You don't want to be aggressively long if you think price is going to go up, or if you're going to move price up. You don't want to be aggressively short, I should say. You want to position yourself aggressively when price is where it's at. When you believe that let's just rephrase this. When price moves up the chart to a point where you think that's a good place to sell short, that's when you want to be aggressively short, not when it's lower on the charts. So you see that here too. Shorts becoming less aggressive. They used to be aggressive here. All of a sudden they're becoming less aggressive. Why? Like I said, I'm expecting a move to the upside. Remember, I've been telling you that this weekly area here is garbage, right? Because the formation is horrible and price was sitting out here for so long. which tells me that institutions had a long time to fill in orders. A long time to fill it in and manipulate the markets. Fill in some shorts, fill in some longs, fill in more shorts, do whatever the hell they want to do. Eventually, price did drop, only to come down and test some demand, only to cause it to go back up again, right? So there's other influences that causes a currency pair to move, like the US dollar dropping from weekly supply, for instance. Not necessarily that they want to drop the USCAD. It moves because of other influences. So price was up here for a long time, which tells me that, you know, I can't rely on this area to be an area where the institutions want to fill in supply and cause markets to drop down. If that ends up happening, great, but I'm not going to assume that's going to happen. I would need to see the confluences. I would need to see on the lower time frames the proper structure to show me that they are filling in supply. And right now I'm not seeing that. Right now when I look at this chart, I see poor formation. I see the reason why it dropped. I see that they're reducing short exposure to become less aggressive. I see short exposure dropping from 68% to 65%. I see net positions dropping from negative 32,000 to negative 23,000. And prior to that, it was negative 40,000. I see all that. I see the US dollar wanting to head higher. I see gold wanting to drop lower. So taking all these factors into consideration tells me there's a higher probability chance that this area gets taken out and we see price move up than price breaking down and going lower. So does that mean I want to buy right now? Of course not. That'd be ridiculous. I mean, you're buying up against a monthly bearish engulf. That'd be crazy. If this gets taken out, yeah, then pullbacks, I'm in there for sure. I'd be happier to take a long once I see the US dollar hitting some very strong demand and I see the institutions wanting to push price back upwards in a more aggressive fashion. So, but you know, and that can take 3, 4, 5, 6 weeks to happen, or 3 months or 4 months for that to set up. But my eyes are on that. My eyes are figuring out what's going on here. What direction are they taking this? Why am I starting to see this? So that could happen, but I'm not making any trades or decisions on here because right now there's no trading signals on this chart. I'm speculating as to what I think is going to happen based on all the confluences that I'm seeing in the markets and on the data. But I'm keeping my eyes open for this removal right here. Okay, so let's go on to the US dollar Swiss franc. What do we see here? We see longs dropping from 37,000 to 32,000 and shorts remaining the same. What ends up happening? Long exposure drops from 68% to 66%. Net positions drop from positive 19,000 to positive 15,000. So we're testing this area of weekly demand. A quick test here, and now we're starting to see momentum shifting, right? Tested monthly area of demand here. I'm expecting a move to the upside like that. Once that gets up here, it's going to be around here where there's some kind of going to be some resistance there that the institutions might be looking at and retail traders. Once price gets up here, I'm going to look for momentum to shift to the downside, and I'm going to be aligning it with the momentum shift to the downside with the US dollar. Once those two align, I'll be waiting for the institutional trade signals to appear, and once they appear, boom, I'm getting in short this sucker. Okay. Next is the euro, and what do we see? So longs hardly make a move, shorts hardly make a move. 69% long exposure, net positions still roughly the same. And that comes as price moves up. So price moves up into the tested weekly area of supply, and they're not adding longs and they're not adding shorts. They're not making any moves at that point. We've already established that they're profit taking, right? Because we used to see positions in 262, 258, 251, boom, 230 with this big drop here. So they're profit taking. We're hitting a monthly area of supply with a weekly area of supply nested inside. Profit taking, I'm expecting a move to the downside. So I'm just waiting patiently. No trade signals on this one just yet. I was hoping to get one to present itself last week. It never happened. And as it stands right now, there isn't anything that I'm liking. So I'm not taking any trades on this right now. I have some short positions open already on this, and I actually added another short position earlier this morning. But for precision entry trades, I'm not looking for. I don't see any, precision entry based on institutional trading signals. So nothing for me to trade as of yet. With the pound, we see longs closing off once again, and that comes as price was pushing to the upside. Price was pushing to the upside, and they're dropping longs from 64,000 positions to 57,000 positions, and they increase short slightly. Net effect is long exposure drops from 57% to 54%. Net positions drop from positive 14,000 to positive 7,000. So again, expecting a move to the downside. So nothing else really to say here. I still have open positions on the pound, and I'm looking to profit when price gets down to this area. Nothing else really to do except for sit and wait. A lot of people are very impatient. I get messages all the time when price makes a little move to the upside. Oh, has the sentiment changed? A little move to the upside. I don't know what time frame charts these people are looking at. Maybe they're looking at 30-minute charts or 50-minute charts or 1-hour charts. But let me give you a piece of advice. If you're looking at lower time frame charts like that, and you see a little move to the upside, and you think that the sentiment is going to change based on higher time frame analysis, I mean, we're looking at monthly and weekly charts here. It takes days for price to play out. A little move to the upside within a 1-hour bar is nothing. It's nothing compared to what's going on in the bigger picture. It means absolutely nothing. The only thing that could happen on this chart that would make me see something else is happening as opposed to profit taking and a push downwards would be for the US dollar data to be different, gold data to be different, the charts to look different, for euro to look different, for all the profit taking data that's been displayed to me over the last few weeks to not be taking place. I mean, you see how many things would have to happen for me to not have the belief that this theme is still in play. Okay? That's what would have to happen. Not a 1-hour bar moving up. That's not going to make me change my mind. And that's what happens when you're new to trading. When you're new to trading, that's what happens. You do your analysis when the markets are not moving, and your brain is thinking clearly, and you're being objective. And your analysis tells you this is what's going to happen. And then the markets start moving, and you're like, okay, I want to make some money. I did my analysis. It's going to go down. Oops, what's that? Why am I seeing a bar going up right now? That's crazy. I just did my analysis, and my analysis said that markets were going to move down. So why am I seeing a candle moving up right now? And then you start playing tricks. Your brain starts playing tricks with you. Aha. You see, you thought it was going to go down, but it's not, because that candle is now moving up. Maybe you were wrong. Maybe your analysis isn't good. Maybe you're not good. Maybe you're not even a good trader. Maybe you shouldn't even be trading. Maybe you should start asking other people for their opinion, because maybe your opinion is garbage. If you have this going on, you better start focusing on trading psychology. And don't worry about trying to figure out the direction of price, moving up or down, because honestly, it doesn't make a difference if price is going to move up or down. You're going to end up failing as a trader. Period. Guaranteed. Guaranteed. I tell you that right now. Guaranteed. You will fail as a trader if you don't get your mind in check. Period. Bottom line. Doesn't matter how good your analysis is. Because your analysis can be so good where you figure out this was what's going to happen, but then when the markets are live, your brain is going to play tricks on you. You're going to see things happen, and your brain is going to sabotage you. And unless you understand that and figure out why that's happening to you and fix it by doing what's necessary to conquer that aspect of your mind, you are not going to be profitable. Period. Okay? Take it from me. I know, because I've been there, done that. And I wanted to avoid getting into trading psychology for a long portion of my trading career until I just couldn't anymore. Because no matter how many thousands of hours I put into my technical analysis, my trading performance wasn't getting any better. Even though my analysis was getting better. My analysis became so spot on that it was ridiculous. But for some reason I couldn't take that and turn it into money. And the reason was because of my trading psychology, because of my mind, because of what my mind was doing, what it was telling myself, how it was tricking me into not believing in myself. Guys, trust me, you don't even realize how big of a deal trading psychology is, okay? Until you really want to become professional as a trader. Amateur BS, you want to make a few pips here and there, and you know, it's like going to the casino and, whoo, I made some extra cash. Fine. You want to play that game? Go. But if you want to take this game serious and you want to make a living from it, and you want to make big money in this business, if you don't take trading psychology serious, you go nowhere. Period. That's the end of it. There's nothing else to be said about it. You can look at it any other way, but it's not going to make a difference. Anyways, let's get back on track, and let's look at the next one. US dollar, Japanese yen. So it's dropping. Obviously, we've been expecting this drop. They're still long, right? They closed off some longs from 157 to 153. They're adding some shorts. That happens as price drops here, so that makes sense. Profit taking on longs, adding some shorts. Long exposure drops 2 points from 79% to 77%. I have orders to go long here because it's an institutional trade signal. I think once price gets down here, price is going to have a momentum shift, and it's going to move to the upside. So I've got orders to get in early as price comes right back in, drops right into this area of demand. So I'm getting in early with a primary position. Then I'm going to be waiting for the institutional trade signals to present itself on other time frames, and once that happens, I'll be getting in on secondary positions, and then I'll follow through with more positions to the upside, because I do believe that we're going to see a big move up here. Why do I believe that? Well, because when you take a look at the charts and you read them, and you read them properly, and you understand how the markets truly work, then you know that there's a higher degree of chance that price is going to build a position from here and move upwards than that not happening. So institutional trade signal to buy is right here. I'm getting in there. Alright, Kiwi, last one. What do we see here? We see that institutions increase longs from 28 to 29,000. They also increase shorts from 26 to 28. The sentiment here is still somewhat neutral, 51% to the long side. This is a ugly chart. Weekly supply above, weekly demand below, you know, trend lines here, trend lines here. It's a mess. I'm not trading it. Net positions are positive, but overall sentiment is neutral. Taking any trades on here would just be, you know, just playing casino. Buy and pray that it goes in your direction. I'm not going to do that with my money. So that's pretty much it, guys. If I take a look at the economic calendar for this week, I don't see anything really important that sticks out for me. So I just I'm going to be expecting that. Cool. I'm going to be expecting. All right. I'm going to be expecting the profit-taking theme to continue. I'm going to be expecting to see the euro and the pounds drop, US dollar to head higher. And if that doesn't happen, if something completely different happens, I'll be completely shocked because it'll be completely against everything that I'm seeing. But anything is possible. Anything is possible. So I'm going to wait and see patiently. I have plans in place in case the euro goes up higher and the US dollar decides to drop. I have everything in order, so I'm not worried about anything. Anything can happen in the markets right now, but I know that there's like a 80 to 85 to 90% chance that what I've been saying is going to happen is going to happen. Period. Okay? And I have proof. I have confluences. I have data. I have chart structure. I have all this stuff to back up my reasoning. All right, guys. So hopefully this was helpful for you. Hopefully you'll incorporate this information into your own trading. And until next time, have yourself a great week.